Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Sunday Roast. It's Sunday the 22nd of December and we're delighted to be joined by Rick Rule, CEO of Rule Investment Media. It's great to have you back, Rick. How's life treating you?
Life is treating me very well, partially because you guys decided to have me back on. It's an honor and a pleasure to be back with you.
Excellent. Thanks for that. So, I mean, how do you get ready for Christmas? And obviously there's a lot to do. And we talked last time, didn't we, about the battle bank as well. I just want to touch on this.
Yep.
And how is that coming along? Because for those unfamiliar with it, this is I believe your seventh bank, which is quite an achievement. Just talk the listeners through why you like these sort of challenger banks.
I reckon Rick gets ready for Christmas by looking at balance sheets of crappy European companies.
Well, that's true. You know, you need to do through the year the things that you enjoy, even if other people don't enjoy them. And that is, in fact, something that I enjoy. As to Christmas, I'm coming into my 71st Christmas, so I have an awful lot of experience in terms of training for Christmas. And I'm delighted to say that I'm going to spend it in the company of a couple good friends and my wife. And I can't imagine anything that will be more pleasant. We will exit into the woods and cut down what will probably be the ugliest Christmas tree on the planet, quite an achievement. And then we'll defile it with ornaments. We will exchange presents and greetings in a wonderful way. I'm looking forward to a spectacular Christmas. As to Battle Bank, there has been some changes with Battle Bank since our last discussion. As you note, I'm a veteran of starting banks, or at least backing other people starting banks. And traditionally, what one did was put together a business plan, attract some capital, explain the business plan to the regulators, and then suffer through a fairly long wait to be approved. The last time we did it, if my memory serves me correctly, it took us 19 months to get through the regulatory morass, which seemed insufferably long. But we did it. This time, we were 2 years, 7 months and counting. So what we've decided to do is buy a small bank, already nationally chartered, paying way too much money for it, not unlike the way mining promoters might buy a shell to save themselves the time in front of the regulators. But, you know, I've just decided to bite my pride, exercise common sense, and shorten the time frame and increase the certainty with regards to the bank. The very good news about the bank is our last bank, Everbank, we built from a zero deposit base and zero customer base to, if my memory serves me correctly, 275,000 customers and $28 billion in deposits. But we did it from a standing start. In this bank, there are almost 16,000 people on the waiting list before we open. And my suspicion is that particularly deposit growth, but also loans to people against physical gold and silver, will make the growth that we enjoyed in Everbank seem very, very, very small. I'm looking forward to truly opening with a roar, which will be fun. There's nothing that gives me more pleasure than finding a market niche that can be served by a younger team that I believe in and backing them, which is precisely what I'll be doing with Battle Bank.
Absolutely. And why would they come to Battle Bank rather than using their existing bank? I mean, I know you said in the past that for every frustration of everything that's wrong with your bank, you know, that all the complaints, you're going to want to look elsewhere. So why would somebody, presumably interest rates are going to be higher, as you say, maybe it's pegged to the price of gold?
You know, Phil, I don't know what your relationship was with your existing bank. I'm a really good bank customer. Let's get this out of the way. I'm rich. I understand how to use credit. I pay back loans, you know, a really good customer. And I would describe, I deal with 4 banks right now. I would describe my relationship with those banks as sullen. Maybe not quite mutinous, but sullen. And my relationship with the banks should be spectacular. They should be euphoric because I'm a really good customer. I won't name the bank because I'll have to do business with them for a while longer, but I walked into the branch The branch that I most commonly use here in the States, wonderful woman runs the bank, nice as could be, frequently gives me tea and cookies and stuff like that. I asked her some questions about their deposit products because I'd had a liquidity event. And she looked at me in a sort of a puzzled way, and she pointed me to a white courtesy phone, probably connecting me to India. A wonderful woman who knew very little about banking. And I wondered to myself, what possible use is this branch to a good customer? I could have tea and cookies at home. And my wife is a very nice woman and knows at least as much about banking as this branch manager did. So the idea that I can start a bank, again, where my branch is their cell phone or their computer, and I can save 150 basis points by not maintaining useless real estate and a receptacle for tea and cookies, is something which is attractive to me. This bank, by the way, it turns out, I learned on my phone call, I think, to India, has 16 deposit products. 16. 5 of these deposit products pay no interest.
How do they call it a deposit product?
Isn't that a good point? So I've decided in my naivety, and there was nobody there to convince me any different, that they have 16 deposit products because they want to confuse me into choosing one that doesn't pay me interest. There are several $1 trillion in the US in deposits with big banks that pay no interest. I can outcompete these guys, Phil. You have your choice between high interest and no interest. Which would you prefer? Think this through. I'll give you till Christmas to figure it out.
Well, the interesting thing is that a lot of these accounts were high interest, and then subsequently the high interest was lost for whatever reason because something else was created. And
Yeah,
if you didn't move your money, then you were in the no interest section.
people say, I'm going to go to a safe bank for my money. And so they go to a bank that, quote, is safe because it pays them no interest. This is truly insane. I know a lot of guys who work in big banks, lots of them, and a lot of them are really smart. But here's a different problem. If you're JP Morgan Chase or you're Barclays or you're Hong Kong Shanghai Bank or you're Bank of America, you try to bank 500 or 600 industries. Nobody can be that smart. Nobody can understand how to write collateral agreements in industries that they don't understand. My success in banking, really my whole life, has been that I've focused on niche markets that I understood better than my competitors. And I have a lower customer acquisition cost than my competitors. I can't compete with Wells Fargo. I can't compete with JP Morgan Chase. And guess what? They can't compete with me. What is to them a crumb that falls off the table and sullies the floor is a banquet to me. We made a boatload of money at Everbank with $28 billion in deposits. Bank of America could have a $28 billion outflow and not notice it. So it's a wonderful business for me.
Well, the interesting thing about the bank situation for you was that you've built your career, your life on the gold situation, and there's obviously a lot of people that want to hold physical gold and feel the need to hold physical gold. But the downside of holding physical gold is there's nothing there for you as you go along. But if you were able to borrow against that physical gold, then you can use that capital, whether it be an interest-bearing account to give you some money while you hope the gold appreciates or whatever. But I see this as a very novel idea, a very normal idea at the same time, and the normal banks are never going to do it.
I love the fact that my U.S. banking competitors don't consider gold and silver to be good collateral. I happen to know that there's liquid markets 24 hours a day. If I had to foreclose on somebody's gold and I had to sell it, as opposed to foreclosing on somebody's house, where the conveyance could take 9 months, I'll take the gold, thank you. I'm particularly attracted to the fact that none of them want to do it, which means that in the length and breadth of the United States, there's only one bank that considers gold good collateral.
I mean, do you think we'll ever see the gold standard come back, Rick, or do you think they'll pin it to some sort of Bitcoin crypto type, decentralized finance? I don't know.
Just for fun, occasionally I reconstruct my own finances in gold. So you could say I'm on a gold standard. Will the governments ever go on a gold standard? Of course not. If they were on a gold standard, it would limit their power. What politician goes into office, subjects themselves to all that indignity in order to have their power reduced? The probability that we'll have a gold standard in any society that has an alternative is nil. It doesn't serve the self-interest of the politicians. There's nothing really that keeps you from operating on a gold standard. And I believe that within 2 years, we will have redeemable delivery receipts entered into the blockchain in a way that's recognized by the LBMA, by the COMEX, by the World Gold Council, and that software will enable the tokenization of physical gold that's redeemable. And I believe that you will be able to use fractional ownership of your gold to buy a cup of coffee at Starbucks. I mean, I think we'll see within 2 years the return of gold as both a store of value and a medium of exchange without the extraordinary transaction costs that burden the use of gold as a medium of exchange today. This is coming to a wallet near you. A lot of money, some of it mine, is being spent on this technology, and somebody is going to get it right.
Yeah, absolutely. So, I mean, I just want to go through some, 2024 is pretty much done. And I just want to ask, what have been some of the investing highlights for you in 2024, Rick? I mean, in a year we've seen Bitcoin reach all-time highs, busting through that $100,000, and gold still hovering around those all-time highs too. And obviously we've seen cooling off on some of the other critical metals. What has been kind to you this year?
Actually, the market has been kind to me. I didn't pay very much attention to commodity-specific theses and paid much more attention to drill results or companies that were doing really spectacular work. G Mining comes to mind. Their completion on time, on budget, at nameplate capacity of the Tocantins deposit in Brazil was attractive. Their subsequent takeover of Reunion Mining, which I was a very large shareholder of, with, we hope, the threat of the ability to do it one more time. I guess what I'm trying to say is that the companies, irrespective of commodity, that delivered on their promises did very well in 2024. What has amused me even more is that the market malaise that is infesting the sub-billion US dollar market cap continues. And the investors, I think, aren't paying very much attention to the difference between reality and narrative. So I would suspect that 2025 is going to be a stock picker's market too. I don't do well in rip-roaring bull markets because I don't reallocate capital well. I build up cash. In choppy markets where you can look at a drill result, we're in a market now where sometimes even really good drill results cause the market to go lower. People are trying to trade on narrative. And that's a perfect market for me when I have the ability to absorb information, consider the information, and act on the information in a relaxed basis. That's absolutely a wonderful circumstance. And I'm seeing that. I think, I need to preface this next statement with I think. I've now graded in 10 years over 100,000 portfolios. And one of the things that happens when you grade that many portfolios and you have that much historic data to sort is you can understand some trends in the things that people get right and the things that people get wrong. And perhaps as a consequence of social media, I don't know, people are much more narrative oriented than they are reality oriented. And a lot of resource investors have bought into the same resource narrative that I've bought into, but that narrative is a 5 or 6 or 7 year narrative. And these same investors are employing 2 or 3 month tactics to 5 or 6 or 7 year narratives. That's not going to have a happy ending. Despite the fact that at 71 years of age, Phil, I don't have that much time left on Earth, I've become much more patient, not because I don't want an immediate outcome, but rather because I've learned in 50 years of speculating that an immediate outcome is not on offer.
Yeah. And I
And
think 6 and 7 years is actually being pretty kind as well. I think a lot of them take a lot longer than that.
Absolutely. I think as an example, the oil and gas thesis probably takes 5 years. I think the copper thesis takes at least 5 years. I think for lithium to bomb out, which still hasn't happened yet, if you're thinking about the recovery trade in lithium, you're probably talking about 6 or 7 years. If you are talking about another important theme to me, which is the coming prominence of the term market in uranium and the ability of independent companies to finance, you are talking about a theme that takes 5 or 6 or 7 years to play out. And yet the discussion of uranium on X and other platforms like that, even rural investment media, seems to be all about what might happen next week, which is truly silly.
Okay, I mean, so the other thing I wanted to talk about, Rick, is before we look at some stocks for 2025, and I know you're a fan of, you've referred to them as the old man's industries like the oil and coal and insurance, but I believe having grown up in Silicon Valley, you're sort of no stranger to tech, and I want to run this one by you because obviously we've seen a recent surge in AI stocks, sort of significant increase in demand for data centers and specialized chips, which have benefited companies like NVIDIA, Broadcom, and Palantir. So, NVIDIA have maybe seen a substantial growth due to the GPUs for the AI processing. But do you have any kind of interest? Would you invest in AI themed stocks, and sort of how do you see AI shaping the future investment opportunities?
I don't believe that I have a competitive advantage in AI or technology relative to a whole bunch of 20-somethings running around Silicon Valley where I grew up. I'm close friends with a man named Paul Stevens, who was the Stevens of Robertson Stevens, an absolutely legendary Silicon Valley technology underwriter. And I remember having a discussion with Paul about 30 years ago, talking about some forms of software. And Paul said that the half-life of the economic benefit of that software was about 18 months. That meant that by the time I understood it, it was obsolete. As opposed to that, I can invest in coal with a product cycle of 8 years or 10 years, copper with a product cycle that might be 10 years. From my viewpoint, competing with a whole bunch of people who are smarter than me in technology, where the product cycle is 18 months, relative to competing in industries that I've spent 50 years getting to know, where the product cycle is 8 years, the outcome is very attractive to me. I could be tempted to invest in AI if the sector took in $10 trillion worth of investments, and then the stocks fell by 95%. I could be tempted to invest in the sector if it was so roundly hated that the number of people competing with me was dramatically low, where the probability of my being able to outcompete was a function of how few people I was competing against. And I was looking at the discounted net present value of $10 trillion worth of mistakes that people who were smarter than me had already made. But the idea that I'm going to invest in a fad or a fantasy or even a reality that's broadly popular among people who are much smarter than that's not going to happen.
I like that. It's a real contrarian answer. I didn't expect that at all, to be honest.
I've earned my humility, Phil.
Yeah.
When I was a young man and I made a lot of money in natural resources in the 1970s, I came to believe that I was actually a really good investor, and that I could operate businesses and invest in a whole bunch of sectors. And I got spanked fairly thoroughly for that. And I have no particular desire at age 71 to be bent over and spanked again. The consequence of that is that I guard my bottom. I stay out of businesses I don't understand.
I'm not sure you guard your bottom in every circumstance, Rick, but let's not go
It's a
there.
horrible image.
Listen, we before on our preamble, we were talking about the US dollar.
Yeah.
From our last conversation, Mr. Trump has been put on his pedestal now, and Mr.
Yeah.
Trump is going to be your president for the next 4 to 5 years. 4 years. And yeah, first of all, what are your thoughts on that? What has been the reaction in the US to people who hated Trump? That would be interesting to understand.
Yeah.
And secondly, the US dollar soared after he got in. Though he's professing he's going to tariff everything and spend a huge amount of money. I'll leave it to you. Unpack that, because I don't get that.
Mic drop, mic drop.
I'll do my best. I live on a small island in Puget Sound where there were acres of Biden signs. Parenthetically, many Black Lives Matter signs and no black people within 8 miles of here. A real granola community. And there's widespread despair over the election of Trump. That is maybe the only thing that makes me happy about the Trump election. The people who feel uncomfortable about it. There are, of course, people who feel comfortable about it, too. Wall Street clearly feels comfortable about it. It is unlikely, as an example, that the carried interest exemption for money managers will pass under Trump. Obviously, those money managers feel good about the fact that they'll be taxed at the capital gains rate rather than the ordinary income rate. And I think on a global basis, people are attracted to the fact that relative to other countries, the United States continues to be capital friendly. Money is pouring into the United States from other places. I don't think, as an American, that the US dollar will ultimately preserve my purchasing power for reasons we can discuss later. But I agree with the wonderful Doug Casey quote from 20 years ago, which says the US dollar is certainly the worst currency in the world, with the sole exception of all of the others. When I look at the maintenance of my purchasing power in an absolute sense in US dollars, I'm afraid. When I look at the US dollar relative to the Canadian peso, Canadian dollar, I'm sorry, the Australian dollar, pound sterling, the euro, the Swiss franc, the yen, the renminbi, anything perhaps other than the Argentine peso, which is not a very liquid currency, I feel less bad about the dollar. Note I didn't say good. I feel less bad. And I think that continues.
What does that tell us about a store of value? I mean, because these are just pieces of paper, whether it has $1 written on it or a pound written on it or a renminbi written on it or whatever you want written on it. The reality is this is a made up printed piece of paper that is now backed by absolutely faith and God, and that's it.
Correct. The point you make is good. And despite that, I maintain fairly substantial US dollar liquidity. I do not save in dollars. I have US dollar liquidity, which I get some interest on, not enough to compensate me for the decline in purchasing power, but I need to maintain the liquidity. In my 50 years of investing, I've seen 4 liquidity squeezes, things like 2008. And if you go through a liquidity squeeze without liquidity, you have a truly religious experience. For me, going through 2008, having a lot of liquidity and some experience, meant that 2009 was my best investing year on the planet. If I have the choice between being taken advantage of or taking advantage of a liquidity squeeze, I would prefer to be the one taking advantage. The consequence of that is that I regard US dollar liquidity as a circumstance where I sacrifice in the near term purchasing power, and I regard that sacrifice as an option premium on having the liquidity to take advantage of a liquidity squeeze rather than being taken advantage of. But make no mistake, I save in gold. I maintain liquidity in the dollars. I invest in investment quality businesses, and I speculate in exploration stocks and juniors. Those are all different investment categories, all different asset allocation categories for me, and I'm active in all of them.
So, I mean, you answered the second part of my question because I was looking to see, in terms of resources, what's happened in 24, and gold has had a good year,
Had
34%
a great
or
year.
thereabouts, up, which is tremendous year. Now, does that mean we're going to continue in 25? Who knows? I'll let you answer that in a minute. But what other resource-based things do we think are going to have a play over the next? And I'm not even worried whether it's 1 year, 3 years, five
Yeah.
years, whatever you think. Are we talking about uranium? Are we talking about, because for me, there has to be more uranium for what the world wants to do. The same with copper. The same with smaller metals, if you like, in terms of more niche metals like the tungsten in Guardian Metal Resources, which we talked about earlier, which the US needs their own source of. So what are your thoughts? Because we look at this and say commodity cycles generally last 5 to 10 years and possibly even longer. And really, we've only just begun, maybe 1 or 2 years into this cycle.
I would agree with all of that. I would ask your listeners to consider, however, that the inevitable supply shortages that we're going to have in oil and gas, in copper, in things like that, don't necessarily result in price increases if demand falters as a consequence of recession or depression. I'm not suggesting to you that we're going to have a recession or a depression. I'm not smart enough to know. What that means is that I sort of scale into those opportunities, and I scale in much more conservative fashion than I did as a young man. I insist that any exploration project, as an example, that I speculate in, have, to me, the chance, the strong possibility, if not the probability, of becoming a tier one deposit. I don't care about small deposits. Small deposits can only ever make you small money, but they carry big risks. If I'm going to take big risks, which I do, I want to make big money. So I want to believe that my exploration project should have in excess of $10 billion US not net present value, pardon me, in situ value of reserves and resources. I want to believe that the target could be in the lowest cost quartile, AISC quartile worldwide. I want to believe that the deposit could be in the best quartile in terms of return on invested capital, ROIC, but at least 25%. And that means that when I look over the 3,000 or so exploration juniors active worldwide, I get to throw 2,900 of them in the circular floor file and not waste any more time on them, except for my own amusement. I am attracted to all of those macro theses, every one that you talked about. I'm less attracted to the minor metals because it's easy to be wrong. One new supply source or one new substitution technology blows those stories. I got attracted to the vanadium story 10 or 12 years ago. I made a mistake, which I make fairly frequently. And I sat down with Robert Friedland, and he was explaining to me the vanadium redox battery in a way that only he can do. And I decided, you know what? I don't own enough vanadium. Whenever I sit down with Robert, I don't own enough of whatever he's fond of. And so
he must be pushing copper at the minute then, if you're
yeah,
sitting down with him.
And zinc. You'll notice that he has a zinc deposit coming on, and so the world is woefully short of zinc. He's a wonderful human being, and the reason why he can sell me so much is because he's made me so much money. Let's get that straight. I'm making fun of him, but I'm not that easy a mark. At any rate, I was a bit early on vanadium, like 8 years. It turns out if you're 8 years early at an 8% cost of funds, You're not early, you're wrong. So, but that's part of
It's
the
all
game.
gone by that stage.
Yeah, that's part of the game. I completely agree with you in the uranium side. I'm not sure in the near term that we're going to see a higher spot price because we don't need it. And the spot price is becoming less and less relevant. The truth is that on a daily basis, there's more volume in the Sprott Physical Uranium Trust than there is in the spot market. So you need to decide, do you prefer the Sprott market or the spot market? What that hides is the fact that in uranium, unlike any other substance that I know of, you are developing a contractor term market where the producer can know with some certainty how much material they can sell and how much they can sell it for. In the uranium market, you are going to be freed from the tyranny of the overnight spot market. That certainty in terms of price or volume is going to lower your cost of debt capital. It's going to make debt capital available to non-investment grade companies. And it's going to allow lazy securities analysts like me to understand more about net present value 15 years out because of certainty around price and volume. This is a step change in the uranium market. And not 1 in 1,000 uranium speculators talks about it on social media. I guess because it takes 5 minutes to describe and half an hour to understand. It requires speculators to think as opposed to feel.
So from that perspective, you are saying that the spot price of uranium doesn't really matter if you've got a sub-market that basically is saying for the foreseeable future, for the next 5 to 10 years, we will take your uranium off you at this price.
I think the spot market matters to traders, and it matters to the narrative oriented. The problem is I've been watching these markets for 50 years, and I don't know very many successful traders. Nor do I think there's any net present value, any certainty in narrative. What I care about is constructing a model around a deposit and having the ability to know with some certainty what the volumes I sell are, what the prices I sell for are, and being able to construct margin. What's really changed is that a non-investment grade company that hitherto would not have been able to develop a deposit and would have had to sell it to a major can now go to Westinghouse, part of Cameco, have their mine built on a fixed price basis while taking the offtake and pre-selling it to investment rated counterparties. Duke Power, Southern Company, China General Nuclear, Tokyo Power, Ontario Power, and take those offtake agreements literally to the bank as collateral. The valuation then is the delta between the cost of capital over a fixed price mine build and the return on capital employed, contractually entered into with investment grade counterparties. We have never seen a financial construct in natural resources like this ever.
Yeah.
Really profound, but it's boring. Nobody cares. I love that. I just love that.
So this is going to mean that some of these uranium explorers are going to be pretty safe bets then if they actually find the uranium.
The safest bets, if they have an economic deposit that extractive industries have ever seen, unless you have a replay of Fukushima or 3 Mile Island. You need to keep in the back of your mind, if you're a uranium speculator, that there is a very slim chance, given the improvement in technology, but a chance nonetheless, that despite doing everything right, you lose 85% of your money.
Yeah.
If you can't wrap yourself around that, you need something like U.S. Treasuries, where you're guaranteed to lose money in an
inflationary basis.
In a mind-easing basis.
From that perspective, what do you think then of? I know you're a holder of Power Metals' deal on the Athabasca Basin with.
It's much too early to benefit. Remember that Power Metals doesn't have uranium; they're looking for uranium.
Yeah.
If the price of something that you don't have any of goes up, it doesn't do much for you. What it does do is, to the extent that Power Metals makes a discovery, or more likely, to the extent that Power Metals generates some intelligent exploration concepts, which they farm out, that the prevalence of smart capital looking for uranium, understanding that if they succeed, their cost of capital is going to be very low. That's a wonderful indirect benefit to Power Metals.
Yeah, well, with this deal that they've basically farmed them all out, and somebody's put in 10 million US, I think it is, into this Fermi exploration now in the basin with 16 or 17 licenses.
Right.
It looks like there is the probability of them finding something has just risen because of this money that's going to be put in the ground.
There is zero doubt that without money, the probability of an exploration success is zero.
Yeah.
What I think matters to sentiment is that because of the financing certainty, you will see M&A in the junior uranium space. And that M&A will add both hope and capital to a sector that's been starved for both. Will this happen in the first quarter of 2025? Almost certainly not.
No. Well, coming on to that then, what do you think in the UK small cap marketplace in the first 6 months of 2025? Do you think it has a chance? Is going to do well?
That's not how I think, so I don't know.
Okay.
I mean, I really, 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 truly don't know. I am attracted to names like Greatland Gold, but not necessarily on a 6 month basis. I'm not smart enough to know what happens on a 6 month basis.
Mm.
I look at companies that I think are selling at substantial discounts to their intrinsic value. Whether or not, these companies always have warts. They always do. That's why the discount's present. Whether or not they manage to remove the wart in 6 months, or whether or not some extraneous event occurs that causes people to overlook the wart, I'm not smart enough to do that.
What do you think of the fact that the Greatland have just announced that their first pour from Telfer? I mean, surely that's a good progress, and obviously the acquisition has been fully finished now. What do you make of that news?
The acquisition took real guts. You're going from a developer which has its own set of challenges to an operator of very mature assets, and you are betting that because those assets are core, they're a focus of yours, that you can improve on the performance of the people who operated those assets before you. All I can say is management's voice to God's ear. The size of the prize is spectacular, and I have a high regard for the people. With regards to their own pour, I'm betting that the quality of the deposit is high enough that their ability to move from first pour through to nameplate capacity will be fairly smooth. We won't know that for 5 months or 6 months.
Yeah.
It takes a long time to shake a mine and a mill in.
Yeah, and there'll also be copper concentrate as well from that, presumably.
Yep. So I'm betting that the progress from technical completion to nameplate capacity will be smooth. If I'm right, notice I said if I'm right, that stock will re-rate. I also have watched some management teams for many years take over aging deposits that have been operated by big companies as cash cows without sufficient reinvestment of sustaining capital and without sufficient love put into them, and really truly turn them around. The Telfer asset is a legendary asset. The idea that there is more exploitable ore there seems to me to be a certainty. Whether or not Greatland is able to find it is a different question. Will they have enough balance sheet flexibility that they can put millions of dollars into Telfer over the next couple of years, as opposed to taking millions of dollars out? And if they do the right thing, will the investors have the patience? Remember that investors want immediate gratification, and that's not on offer here.
Yeah, Sean Day as I think it's managing director there of Greatland, is I think he's done this before. He's taken an old asset and basically turned it not into a new asset, but
He did it with
extended its
Did
mine
it with
life.
Northern
Northern
Star.
Star. And when we've spoken to him privately, he's licking his lips that he can do the same thing again. But as you said, it is, can he do it? Or can the team there do it and help people to understand that there's a big prize here, and the prize isn't
Yeah.
just to
The
get
fir-
the half a
the
million
first
ounces out of Telfer.
the first 2.5 years at Northern Star were a wonderful example of management discipline. They did not milk those assets. They reinvested in the assets. They re-engineered the assets. They There was a deferred benefit, which allowed them to enjoy the benefit. That's why I'm still in Greatland. I watched the discipline that they exhibited, where they told financial interests, "You're going to have to wait. These assets have been milked. These assets need to be beneficiated before we can take the cash out of them." That took real guts, to stand up to the Australian East Coast bankers, to the London bankers, to the North American speculators like myself, say, relax. This is not just a stock. We're building a company. Because they had the ability to stare down Wall Street once, I'm hoping that they have the ability and willingness to stare down Wall Street twice.
Yeah, I think it's more likely than not. And that's on obviously also on the resource assumption that the Telfer can be extended out and out and out, but we will see. So the
Right.
other stock that I know that you hold, and we've had this discussion before, would be sovereign metals
Yeah.
and what's happening there. And I know on the last podcast you said, I wish that they could move this forward themselves and not have be taken over by a major, because this is a tier one asset. This to me sums up what you said earlier, was I want it low cost. I want it to be a tier one. And in this case, you get two assets for the price of one, because you're getting the
Yeah.
rutile and you're getting the graphite. So just give us your
So
thoughts on that one.
full and fair disclosure, I'm a large shareholder and I'm actively becoming a larger shareholder. As you suggest, sovereign's perfect for me. There's no topic in the world probably more boring than rutile, uh, and in most markets, graphite. So I don't have very much competition. Many of my competitors can't spell rutile. Hence, there's not much interest. Tier one deposit? Absolutely. It would appear, and we've done some work on this, it would appear that the company will be in the best decile worldwide in terms of all-in sustaining costs in both rutile and graphite. It would appear that the material that they produce is already acceptable to the market. It would appear that even at today's prices for those commodities, that the return on capital employed will be better than 25%. Unfortunately, it also appears that sovereign will disappear into the maw of RTZ, or pardon me, RTP now. What that means is that maybe I'll enjoy a 30 or 35% gain in the near term, as opposed to a 300 or 400% gain in the long term. Make no mistake, I hope that they don't get taken over by Rio Tinto. I hope that I get denied immediate gratification, and in return for which I make a boatload of money. I think the market will be disappointed if they're not taken over. So it wouldn't surprise me to see the stock sell off.
So Rick's basically saying he wants to buy more at a lower
That would
price.
delight
So
that would delight me.
Yeah, it's one of those sort of boring certainties, is it? That it probably is worth more.
It's
But
wild that people are bored by something that is selling, by my estimate, at well less than half what it's worth. To me, that's exciting. But
yeah,
mercifully for me, younger, smarter people tend not to be excited by doubles.
Yeah, they want 10 bags. They the funny thing is that most of the people that will listen to the podcast in the UK, we're in the 10 bagger range, and they in this market in the last 2 or 3 years that almost hasn't existed.
And I have no trouble seeing sovereign. I'm not saying it's going to, but I have no problem seeing sovereign be a 5-year 10 bagger. No problem whatsoever seeing sovereign be a 5-year 10 bagger. I think the biggest obstacle to that is I don't think it's going to last. I think that, Rio Tinto is going to come in, say thank you very much. um, and that's okay. There's nothing I can do about it. And if they pay me a substantial premium to today's price, I'll reallocate the capital in something else that other people find boring.
My take on it is that I think the management knows exactly what they've got, just like you're suggesting.
Yep.
Um, and I am not sure that they're that keen on Rio just coming in and taking it all over, to be honest. But that's that.
You the Arabs say you let the camel's nose in the tent, and pretty soon the whole camel's in the tent.
Yeah,
I remember that Robert Friedland wasn't too happy about Rio taking over Oyu Tolgoi, and you can imagine the extent of Rio's concern as to what Robert felt. So I'm not so sure that the sovereign management team has an awful lot to say in the matter. My suspicion is that if Rio Tinto came with an offer that the street found fulsome, that the street doesn't want to hang out alongside Rick Rule for 5 years. That the money managers in particular who get paid their bonuses based on quarterly performance see what they
yeah.
would consider to be the real yield, which is to say the bonus that the manager enjoys to be more important than their performance over the 5-year term. Many of them, of course, are worried about their Maserati payment in the first quarter next year, a concern that I don't share.
Well, a concern that you don't have because you would buy the Maserati if you really wanted it, and that's
My Toyota
ultimately.
payment is nil.
So
Hey, my Mitsubishi Pajero payment is nil as well.
So, Rick, I just want to ask you something. I mean, you've shared in the past how you started running a bar and obviously sort of stumbled into finance later than, let's say, most might expect. If you could go back in time and give your 18-year-old self advice, maybe a DeLorean on that note, get into the Back to the Future
Yep.
machine. But what would you say? And I ask this because my daughter has literally just turned 18 and she's very eager to start investing. And I'd love to sort of hear your pearls of wisdom for someone starting out today. How would you set yourself up for the future as an 18-year-old?
Allow yourself to get lucky. When I look at what happened to me, I got lucky time and time and time and time again. What I did right was I accepted luck. I went to university, and the university I went to wasn't what my parents preferred, so I had to work my way through university. Turned out to be lucky. I owned a bar, and through my own efforts, that bar became extremely popular among the financial services industry in Vancouver. And although I was going to university during the day studying natural resource finance, I was learning natural resource finance at night from the people who practiced it, who I got drunk. I enjoyed many mentors. And when I look back and I wonder why people who became and were titans in the natural resource industry wasted their time on a bar owner, what I decided was I was a very avid student. And people who have something to teach, who enjoy teaching avid students. So I would encourage your 18-year-old to determine as best he or she could what it is they're interested in, attract mentors, and absolutely savagely pursue their knowledge because they're very, very, very willing victims. I had the good fortune. My career goal, this will show you how boring I was as a young student and bar owner, was to be an international tax lawyer around natural resource taxation. This will tell you just how boring I was as a 20-year-old. And there was an international tax lawyer who I knew that was a customer of mine. And I asked him if I could pay him his going rate for career advice. He said, buy me a beer or buy me lunch or something, which I did. And I explained to him my scheme and asked for his help. And he said, I'm going to really help you. He said, I'm going to talk you out of being a lawyer. I've watched you for a long time, and you'd be a shitty lawyer. I'd hire you because I think you'd be a great red carpet guy. You'd bring me lots and lots and lots of business, but you'd be a miserable human being. I've watched how you run a business, and I've watched a little bit about how you invest, and I think you'd be a great investor. And then he said, one of the greatest investors in the world is a customer in your bar, and he likes you. His name is Peter Cundall. Peter was a legendary value investor in the 70s, truly legendary. He said, if I were you, I'd have the same conversation with Peter Cundall. Now, that wasn't the answer I wanted to hear. I wanted to be, in the centerfold of Lawyer Magazine or something like that, And I visited with Peter Cundall. I talked to him for a while, and he gave me a copy of the book, The Intelligent Investor by Ben Graham. Said, read this and let's talk again. And I said, I don't want to do that. I started reading it. I was about 30 pages in, and I literally couldn't put it down. The point of this is let luck happen. Let luck happen. When I got into investing, I loved it so much that it wasn't work. I was competing against people that wanted to own a Mercedes or a Lamborghini. That was their focus. I wanted to invest. So while these people might work for 8 hours or 9 hours in pursuit of a Lamborghini, I worked for 16 hours because I couldn't help myself. And in each of those hours, I worked harder than they did. I worked twice as many hours and I worked twice as hard. They couldn't compete with me. Yeah. And if a youngster can put him or herself in that position where they have a passion for something that adds value to society, where they get paid for it, and where they allow luck to happen, they can't go wrong. Just can't go wrong.
I like that because it's the passion element. It's the fact that, as you say, allowing themselves to learn from the mentors and and basically be surrounding themselves with people who are more successful than they are. You know what I mean? Like you have to put yourself in those positions. And as you say, out of something that you probably never thought would happen, owning a bar, you created the, look at how, as you say, maybe luck is a certain, but you've got to have a quality and a passion. They
I
trusted
figured it
you
out pretty quick, Phil. Peter Brown used to come in there all the time, and I'd say this to his face, all the time. He was there 5 or 6 nights a week, and he was the dean of the Vancouver Stock Exchange. He was the boss. And I'd pour Peter a very generous serving of vodka, and I'd ask him 3 or 4 questions, and then I'd excuse myself, say, "Pardon me, Mr. Brown, I have to go do some work, but I want to talk to you some more." And I'd run in the back, and I'd write down his answers in this little spiral notebook, And then I'd come back, and by that time, the drink would have diminished, and I'd top it up again and ask him some more questions, run back, run back in the back. So I will say for myself that when the mentors like Peter Brown, like Adolf Lundin, like Seymour Schulich, became available to me, I was merciless in exploiting their willingness to teach.
Rick, the question that comes to my mind in all of that is, what on earth made you buy a bar in Vancouver at 20 years old?
As a young man going to Canada, going to school, I was like any other immigrant. I had no money, and I had to sustain myself. I only had one transferable skill. I was 6'3" tall, 225 pounds, and I'd boxed for 10 years. So I became, my first day in Canada, a bouncer, because it was the only transferable skill I had at 18 years of age. And one thing led to another, and I won't describe the whole torturous process, but I went from being a bouncer to managing bars in receivership to owning one.
Mm.
It
So
happened.
you had your luck there in terms of managing a bar in receivership, because you were able to
Absolutely.
pick it up for very little money, I presume, at that point.
If my memory serves me correctly, 60% of the note plus the working capital.
Very good.
Yep.
And from that, that then built your ability to meet these people.
And in addition to that, made by what was the standards of a young immigrant, an awful lot of money. You know, you can't be a capitalist without capital.
Yeah.
And there's something about a product that costs you 40 or 50 cents to make and sells for $1.50 and needs refills and is habit forming.
And it's
That turns out
addictive.
to be a relatively good business in and of itself. Now, I hated that business. And as soon as I was able, I left that business to go into finance. I knew that ultimately in that business, I wouldn't be a success, that I'd be in prison. And so as soon as I was able, I exited that business because never mind, I didn't have passion for it. I came to hate it passionately.
So I'm gonna rephrase Phil's question then. What would you tell the 50-something-year-old you who hadn't had all that success, but has a small lump of money? You can make it however much you want, 50,000, 100,000, but not an excessive amount of
Yep.
money. What would you tell that 50-year-old something? He wants
Oh,
to make that money into $1 million because he wants a 10 bagger. But how would you tell him to do it?
work, work. If you're going to make $50,000 or $100,000 into $1 million, you're going to make it by taking intelligent risks. And you can't take intelligent risks if you're stupid. You have to outcompete your peers. You have to work a minimum of 1 hour per month, but better yet, 5 hours per month on every securities position in your portfolio. And if you aren't prepared to do the work, you have to change your expectations because they're fantasy. Hope is a really lousy investment strategy. I would first try to tell the person your goals are unrealistic. If you achieve them without working, it will be because $100,000 or pardon me, $1 million has been inflated away to a net present value of $100,000. Consider working hard at what you do, saving, and investing in high quality companies. If that's not what you're going to do, if you're going to try to take $100,000 and turn it into $1 million, understand that's a job. And understand that in that job, you have to compete everybody else who's competing against you. If you aren't prepared to do that, you need to adjust your dreams.
That's good
I like
advice.
that. I really like that.
That's
And the
good
other one,
advice.
the other one, Rick, you know, is the fact that you've honed the art of making these sort of thoughtful investments, whether financial or in life. What is the most meaningful gift, whether it be physical or intangible, that you've ever given or received, and how has that gift shaped your perspective on maybe success, gratitude, and relationships?
The giving and receiving is the same. Mentorship. Uh, when I was young, people were unbelievably kind to me. Now, some of them charged me for it. You know, I'm not trying to say that Peter Brown never made any money off me or Ned Goodman. They made a lot, uh, but they gave me a lot. And what gives me the most joy in my declining years is returning the favor. I'm a director of Students for Liberty, where we teach libertarian and free market principles to university students around the world. I'm delighted to say that this year we've been in contact with 160,000 different students worldwide. I'm able to mentor some of those students individually through Zoom, which has been a huge joy for me. I'm involved in young mining professionals, in women in mining. I'm involved in as many mentoring opportunities as I can reasonably discharge my duties in.
Yeah.
And that's extraordinarily pleasant for me. I'm a budding philanthropist.
Yeah.
I've given away a reasonable amount of money over the last 30 years, some more successfully than others. I've learned how to make money. I'm not as good at giving it away yet, but I'm
It's a
learning.
skill giving money away, isn't it?
I'm learning that balance sheets and income statements, as they relate to mission statements, are just as important in philanthropy as they are in finance. And so I'm becoming a better philanthropist.
I really like
My
that you
my
pay.
wife and I will give away the vast bulk of our estate upon the second to die. And I want to give it away in a way that does no harm and hopefully does some good. And hopefully at age 71, I have a few more years to hone my skill before I shed my mortal coil.
Yeah, I really
I
like
think
that
the fact that you're going to keep busy and you are busy and you're having a lot of interaction with younger people and with other people, this will keep you younger and keep you going for longer, I think, without doubt. So you keep saying you're old, but you're not really. I mean, you're
War,
15 years older than me. I don't feel like I'm old. So what am I going to
War,
do in the next 15 years, you know?
Warren Buffett said that if leading an interesting life was good for longevity, that he was going to bury Methuselah.
Yeah. So we got some roast questions.
Great.
The first question would be, what is, and we'll make it because this is obviously a Christmas special. What is the rule household Christmas tradition food? What would you eat?
What are we going to eat this year? By the way, we're spending Christmas with a mining legend, Bob Quartermain, up at his house. And knowing Bob, well, Boxing Day for sure, we're going to have a ham because that's what we've done for the last 4 years. It's going to happen. I'm not sure what we're going to eat over the holidays. I'm certain that an immodest amount of bourbon will be consumed. We're not driving anywhere, you know.
I've always thought, Rick, that with like Thanksgiving being the big food event, with
Yeah.
the turkeys, that Christmas in the US must sort of live in the shadow of Thanksgiving. Does it at all? I mean, surely that's more about the food and the getting together.
Phil, we're gluttons. I'm afraid to say that at least I disgrace myself at every opportunity with regards to dinner. I enjoy Thanksgiving. I enjoy Easter. I enjoy Christmas. And my wife is kind enough that occasionally we'll have a holiday dinner, say a turkey, for no reason whatsoever. We'll invite neighbors over.
Hmm.
So
So,
I wish I could say that my gluttony around Christmas was special, but it's not.
so no tradition. You mentioned like the ham and having that, but I mean, is there anything you do? Do you put the penny in the pudding? The silver sixpence like they have in the UK. You've got, I think the Irish like they bang the bread against the wall to push away any ghosts or any demons and things like that. Any
I
rituals?
I think this is Rick Rule you're talking about. It's got to be a
I
gold
I
coin
I,
in the pudding,
I
no?
put I put the silver in the pocket, which gets rid of the demon of poverty. Um,
I like that one.
So,
no,
Rick,
I don't have traditions like that.
one of the things that Callie, your person who keeps you on track, hello, Callie, by the way, if you're listening to this, she said that you wanted to tell people about some sort of educational stuff that you're doing early in the new year. So, do you want to tell us a little bit more about that?
I do. In fact, I'll use that lead to tell people a couple things. Uh, the first educational thing that I do is that anybody who cares about the way I think about natural resources can personalize it. Go to my website, ruleinvestmentmedia.com, list your natural resource stocks, and I'll personally rank them. No charge, no obligation. I'll rank them 1 through 10, 1 being best, 10 being worst. My rankings are very harsh, so don't have your feelings hurt. That's all free. If you like that, once every 3 months, we do an 8 hour long on air symposium about one topic. We've done uranium, we've done silver, we've done development stage companies. This time, we're doing an overview of gold. Why gold? Because our listeners have said what they want to know about is gold. The listeners choose what the next boot camp is going to be about. So, January 11th, we're going to do an 8 hour long gold symposium. When I say 8 hours, that's not actually true. We're going to give you so much information in 8 hours that you're going to have to play the recordings at least twice. So don't come if you're not prepared to commit 24 hours of your life to learning about gold. Do not come if, when you look at the newspaper, you read the funnies before you read the editorials or the financial pages. If you're a tourist, if you're looking for entertainment, don't come to the boot camp. If you are, however, that 50-year-old who wants to turn $100,000 into some more formidable sum of money and understand that you have an obligation yourself to your own financial future, by all means come. Our financial education products going back 20 years have all come with a gold-plated money-back guarantee. If for any reason whatsoever you don't think I gave you your money's worth in the gold boot camp, simply email me and I'll give you your money back. Mercifully, in 28 years, we've had to refund about 0.1% of the tuitions that we've charged. But the guarantee is always there. 100% guarantee. If we don't give you your money's worth, you get your money's back. The qualification for that is please don't come and participate in the process if you aren't genuinely interested in the process.
What sort of money is it, Rick? If you give us an idea so people can know.
You'd have to consult the website. If my memory serves me well, and it might not, it's 125 US dollars.
Okay, so about 100 sterling, something like that. It's not.
Yep.
It's not over the top by any stretch of the imagination. If you wanna invest in your knowledge and education in terms of that before you put your pounds or dollars to work, then I would suggest you check that out. What's the website again, Rick?
ruleinvestmentmedia.com or ruleclassroom.com/bootcamp.
Very good. And you said there was something else you wanted to share with us as well as that?
Well, simply the thing that came before that, which is to say I'm happy to review people's portfolios.
Okay.
And I believe
and that's
you said
free.
That's
what the Rule Classroom.
It's free, yeah. And sorry, you said that you'd done already, is it 100,000, Rick, in the past? Is that right? Am I hearing that one correct?
Over 100,000 in the last decade.
And that's you doing that personally yourself, or you've got a team doing it with you?
What we do is we have a database which a whole team updates, and then we populate people's questions from the database. There will be some companies that people own which aren't on the database, companies that we don't follow, but we follow 800 companies. And yes, there's a team. The buck stops with me. I assign the numerical grade, but there's a team that helps me with the financial statements, the geology, the engineering, that type of thing.
Okay, so you're keeping all those companies up to date on a regular basis, and then when somebody pops it into you, you then say. So do those grades change much?
Daily.
Okay, so you're changing companies.
I changed 5 grades this morning.
Okay, so when news comes in, it either goes up or down, depending on what you're thinking. So obviously, if you've had this done a year or two ago, then it's going to be a different game today than it was a couple of years ago.
That's a very good point. Investors and speculators need to understand that the numerical grade is a snapshot in time. As the news changes, as the valuations change, the ranking will change. There have been companies that have been downgraded for no reason other than the fact that the stock went up. You know, if the stock goes up and the value doesn't change, it's relatively less of a bargain. People have a difficult time understanding that, but nonetheless, it's true.
Okay, so you said there's 800 companies in that, and I'm sure you know the ones that are towards the top. So give us, say, 3 that you think have got outstanding. Is 10, I presume, is good?
Other way around. 1 is good.
Okay, 1 is good.
I've given
10 is
now
disastrous.
I've given 10 ones in 30 years of maintaining the database. So 1 is extremely good.
And do we currently have any 1s?
No, we have no 1s. We have no 2s. We only have 3s in terms of.
Okay, so give us an example of a 3 then that you think that could do well over the next period of time.
I'll give you one that isn't a 3 yet, but it's going to become a 3, I think, because the market hates it. And this will bore your audience. But Exxon Mobil, the best capital allocator in the space, Oil prices are selling off because people believe that peace is going to break out in the Ukraine and Russian gas is going to come back into Europe. Might happen, might not happen. Company that is able to increase distributions to shareholders by 14% while at the same time maintaining sustaining capital investments on a multi-billion-dollar asset base. Superb company. A different three, but still in the same industry, and one that might be more accessible to your listeners would be Africa Oil, the Lundin offshore Nigerian oil vehicle. This because it's selling at a 50% discount to net asset value, while getting the balance sheet now in shape to both return capital to shareholders aggressively and pay attention to the exploration upside both in Nigeria and in Namibia. A second three in the oil and gas space, also operated by the Lundins, is International Petroleum, not well known to the British audience. A company that's a heavy oil producer in Canada. A very nice 5.6% current yield. The game changer, the potential game changer here, aside from the fact that, again, it's selling at a huge discount to what it's worth, is the Lundin's ongoing commitment to shareholder distribution. But more importantly, I think in the near term, with the Trump election, the possibility that the Northern Gateway pipeline, the impediments to debottlenecking that pipeline to move heavy Canadian crude down to the U.S. Gulf Coast refiners who need it is really increasing. And it is a good value if that doesn't happen. If it does happen, it becomes an extraordinary value.
Okay.
Another one that is probably closer to your, this isn't a 3, it's a 4, but one that's closer to your readers would be Ecora, a royalty company headquartered in London, one that focuses more on base metals than on precious metals. We believe among the smaller royalty companies, it exhibits the best relationship between enterprise value and net present value. Wonderful pipeline. The knock against it is that the majority of their current royalty revenues comes from the Kestrel coal mine in Australia. People don't like coal. I like money. And people point out that the cash flow from the Kestrel will be in decline, which is true. What they don't pay attention to, because they're anti-coal, is the increasing royalty income that they will achieve from the rest of their portfolio 2 years and 3 years out.
Okay, so one's going to be declining, but it's going to be more than taken up by what's coming behind it.
Correct.
Very good. And you're right, most of these stocks are pretty damn boring. But the reality of the situation is what I'm understanding about yourself from the 3 or 4 interviews that we've done with you, or podcasts we've done with you, is that you are very, very, very focused on the numbers and not at all interested in the narrative.
Correct.
And I
when you
think,
describe something as boring, I think the antithesis of boring is terror. And I prefer being bored to being terrified.
but you did go for the terrifying initially to do very well.
I did.
Is that fair?
I absolutely did. People need to understand that I got lucky. They may or may not. That I worked extraordinarily hard. I didn't have a life.
Yeah.
And most people that compete with me have lives. And I was, despite the fact that I sought risk, psychologically, even in my youth, pretty strong. A 15% move in a stock one way or another, even when I was 19 years of age, didn't faze me. I understood that volatility and risk were very different things. And I've learned through grading 100,000 portfolios that most people have lives. Most people don't have either the financial or the psychological fortitude to compete with me in speculation. And most people don't want to do the work.
I wonder, Rick, if you employed some sort of AI tactic on all that information and data points that you've actually gathered within that 100,000 adjudications of these assets, that you could probably come up with something pretty miraculous in terms of what could or couldn't be predicted future-wise.
We're entertaining a proposal to do just that. And I think it'll be interesting. The data is broad enough that I don't need AI for some of the conclusions.
Yeah. No, I mean, the reality is no matter what we look at, AI does a lot of the spade work that then the mentality of our human essence, if you like, then has to put the intangibles in there, because AI cannot deal with intangibles.
I remember 20 or 25 years ago when I first started playing with a Bloomberg terminal, and I had a young analyst who was working for me, an intern actually, financial services speak for slave. And I remember going to this young person and telling him that I really liked companies that were selling at discounts to free working capital, cash flow positive companies selling at discounts to free working capital, in effect, free bonds. And I said, I understand it's going to take you 6 or 7 weeks to do this. And he looked at me and smiled. He said, sit down. With Bloomberg, we can do this right now. We can sort by cash flow positive negative enterprise value, and it'll screen 70,000 stocks worldwide and give you a list. And it'll do it well before lunch. And I think the beauty of AI is that AI might actually be able to look at the data and suggest to me screens that I couldn't think of.
Yeah. Or not necessarily couldn't think of, but they're just looking at so many permutations so quickly that effectively it can screen things more easily for you. Yeah, and on that note, basically there's a company launch in the UK on Monday, which is called Priority Intelligence, and they're going to be aiming themselves at the smaller cap SME companies. And one of the things that they're looking at is going to the mining companies to actually try and help them in terms of some of the stuff they're doing. So it's going to be very, very interesting space, I think. It's not going to change the world as dramatically as everybody thinks, I don't think, but it is going to make people smarter, quicker, if you can use it, I think.
I hope you're right. Humankind needs lots of improvement.
Yep.
Okay. Well, on that note, I think we've put the world to rights. It's been a revelation. It's always great to talk to you, Rick, and your insights. And I just want to say, obviously, thank you. You're so generous with your time, and I think you made that point earlier on with the mentoring you do, the philanthropical work. So thanks very much for appearing on the Rose podcast, and we wish you a fantastic Christmas and a prosperous New Year.
A pleasure, and to you. The year has been better for being interviewed by you all. Thank you.
Thanks, Rick.
Thanks, Rick.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net